Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Biel, Portfolio Manager at Kayne Rudnick, to discuss President Biden's 2.25 infrastructure plan and if there is value in that $1 trillion package. Julie, it's great to meet with you. Welcome to Trade Talks.
Thank you so much for having me.
You got it. And let's start with the infrastructure plan. How is this different than the CARES Act, and what does it include?
So I think what's important to note is that this is going to be spread over 8 years. And so the fiscal impact is going to take time. I think the immediate impact will actually be pretty limited. It will spread out, and I think we'll start to see more of an impact in second year and third year spread out. The other thing that's important to note is that within the actual act is a lot of benefits for families and things like that. It's not just pure raw infrastructure. I think the important part is the actual infrastructure, because it has meaningful impact both in terms of jobs created today and infrastructure that we need longer term. So it has a long-term impact that I think is really important for investors to keep in mind.
And Julie, when we think about this in the longer term, what sectors or companies do you expect to benefit from this?
So you would think that, the natural constructors, Army Corps of Engineers, those core engineering and construction firms will be beneficiaries. But I think there are interesting plays for longer term investors who maybe don't want quite that much cyclicality. A company I really like is Bentley. Bentley Systems does infrastructure software that helps with the collaboration of creating these projects, as well as maintaining the assets over the long term, using Internet of Things and small sensors and devices to keep track of how the assets are performing over time.
And since the vaccine was announced, we've firmly been in that growth to value rotation trade. Is there still value in value?
So I think we've kind of gotten to a point now where there's just been so much enthusiasm about the reopening that I think we've lost track a little bit of what value really is. And I think the most notable places is that everyone is very enthusiastic about travel and leisure in particular. My concern is that we've kind of moved past the point where it makes sense for these stocks to be as expensive as they are. A company I would pick on is Marriott. Marriott's business, the stock has returned to 2019 levels, and obviously we don't expect the earnings to be anywhere near that in 2021, 2022. I think what's important to note too is that within Marriott's business model is a lot of business travel. And I don't know about you, but I don't think we're going to be seeing the same levels of business travel. So there's a part of that business that's permanently impaired. Now, I know that as investors, we're supposed to look across the valley and see what the earnings are going to be going forward. But I think figuring out normalized earnings for the hotel sector in particular is really challenging. So I think that's very indicative of a market that's not paying enough attention to the fundamentals and is just thinking about year-over-year growth.
That's a great point that you make. So, Julie, with that backdrop, what are you recommending for investors?
We continue to focus on businesses that are high quality. Our long-term time horizon of 5 years means that we want businesses that are going to do well in an improving economy. I like businesses like TransUnion, Old Dominion. These have very strong structural barriers around them, and they can perform even when there is any kind of hiccup in the economy. I think if we learned anything in 2020 is that we can't predict these kinds of exogenous shocks. And I think it's important, if you have a long-term portfolio and a long-term mindset, that you build in positions that allow you to do well in good times and bad.
All right, Julie, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks so much for having me.